Welcome to The Difference Engine, the show for tech founders, investors, and innovators. Welcome to The Difference Engine, and to the first in a series of interviews of European tech leaders brought to you in association with Boardwave. The Boardwave network is a powerful community of founders, CEOs, chairs, independent NEDs, and their investors from across Europe, representing companies at every stage of their development. Boardwave provides easy access to relevant skills, knowledge, experience, mentorship, guidance, and advice, in the belief that, together, this powerful group can help each other build stronger businesses and shape the long-term future of the sector. This week, we are joined by Boardwave member Stephane Kurgan.
So listen to this episode to find out how you turn 150 quants into the team that built the world's greatest casual game. Also find out what Mark Zuckerberg told Stephane about the discipline of becoming a public company and what you do when your share price drops 30% the week after you IPO.
Today's guest is Stephane Kurgan. After an early stint as a teaching assistant in macroeconomics at the University of Bologna, Stephane had a varied career in and around the IT industry. He worked for McKinsey, in e-banking, and in corporate investment, private equity, and fund management, culminating in the position of Chief Financial Officer at the data center software management firm Tideway Systems, which was acquired by BMC. He then became one of the few people that have made a switch successfully from B2B to B2C tech. That's because shortly afterwards, Stephane joined King. And from March 2011 to June 2019, Stephane was Chief Operating Officer and member of the Board of Directors. King was a phenomenon, which became the world leader in digital casual social games on Facebook, mobile, and the web. Stephane, this must have been an exponential ride for you. Can you talk us through what happened and how it felt to create such a category leader?
I mean, unsurprisingly to most of the listeners, growth is fun and hypergrowth is more fun, although it can be a little scary at times. At the time, nobody expected the scale of the success we encountered. If you go back to the early days of gaming on mobile phones, everybody remembers, Angry Birds and those titles. And the leaderboards were very volatile. It was very dynamic. Every month, the top titles in the leaderboards would change. And with the introduction first, actually, of Clash of Clans from Supercell, and then later of Candy Crush, that changed in the sense that, these games became huge businesses in the billions of dollars of revenue. And the leaderboards became much more dynamic. You would find then, these same titles at the top of the leaderboards for a long time. So the trajectory was incredibly exciting and accelerating. Nobody had anticipated it, and so we had to improvise as we went along. The first phase was actually surprisingly short. We launched Candy Crush on mobile. It had been on Facebook prior in November 2012, and it peaked in July 2013. So it took about 7 months to get to, a $2 billion-ish run rate, $2 billion run rate.
Isn't it true that around that time that it peaked, or just before it had peaked, you'd also made the decision to go public?
We made that decision before it went public. We made the decision in the board meeting in the second quarter of 2013 in San Francisco. And then we mobilized, and I think we worked very hard with in essentially building a corporate infrastructure to catch up with the growth of the company. At the time, we had very, very few people in finance, very few people in legal, and in the people. And obviously, if you want to take a company to the stock market, you need to have a very robust infrastructure. So we, with the support of our investors, Apax and Index at the time, we raised to bring on board the talent on the corporate side that would allow us to operate as a public company. And then with the help of some advisors, we ran a process, selected the writers, and managed to get ready for an IPO within 6 months. So we were ready to go out at the end of 2013 in the fourth quarter, where you have a very short window for IPOs. It's the you have these windows when you want to take a company public of a few weeks. You cannot be too close to the time where you disclose results and the like. But we decided not to do it because for a bunch of reasons the conditions were not met, and we took the company public in March 2014.
Before we go there, you're talking to us about the world of B2C, but prior to this, a lot of your time was spent in B2B with Tideway and other companies. How did you adapt so quickly? And like you said, it's a 7-month overnight success to this new world. Previously, you had a whole different setup. You had, enterprise clients, enterprise sales teams. Now you're in a world of you're selling directly to consumers, B2C. I mean, for you personally, what was the change like, the adaptation you had to make with a completely different category?
One answer and one caveat. The answer is for many of the business critical functions, it's actually very similar, and especially in the sense that for King and the games, our marketing was performance marketing, and it was highly quantitative. I think the answer would be different if the marketing was much more brand driven. You have these two major disciplines, and the holy grail is to combine them flawlessly. But with us, the product was the brand. Candy had to a large extent become the brand, and so the brand was kind of sorted, and we focused most of our efforts at the time on performance marketing, where we scaled to a scale that had not been seen before. Certainly in mobile, we were spending more than $500 million a year in performance marketing. But that's, and then if you look at another of the other critical disciplines, obviously the corporate functions are the same, right? It's, if you finance, people, legal, and those are the same. Working with top quality engineers, and we had many hundreds. I think we had 700 engineers at the time. It's the same. Working with quants, because King had about 150 mathematicians, statisticians, physicists, is the same. And then if you run the business as we were doing by according to unit economics in consumer or in B2B are largely the same. And I wouldn't say with the exception of enterprise, you still want to look at unit economics for the enterprise, but the process is obviously very, very, and the skill set to succeed in the enterprise space is obviously very, very different. The one caveat is, that actually I had worked quite a bit in consumer before. I was part of the leadership team of an internet bank for 3 years during the European bubble of 97 to 2001. As an investor, I had worked with digital mapping, and so I had done quite a bit of consumer work.
Sorry, familiar with the customer acquisition costs and all of that stuff, which actually in B2B at the time wasn't a thing. And then when SaaS came on board, everybody tried to learn performance marketing, but you were at probably the best place on the planet to learn it firsthand. And as you say, the rest of the functions quite similar. Interesting.
Is there also something to be said at this time about the nature of the investors in King? Had two investors in the form of Apax and Index, who were, I think even by that time, very mature investors in enterprise level tech. And here they were backing something which was unashamedly consumer. Is there anything interesting to say about the way they dealt with you as an investor and help you scale?
Sure. I would say both of them had, meaningful consumer experience and obviously deep understanding of unit economics. Remember, Index had invested in Skype, which was, the ultimate consumer success story, European consumer success story of the noughties, and Apax, had a large retail and consumer practice at the time.
So they actually had some smarts to bring to the party. So, for that sense, a very good investor to have as you scaled at that speed.
They've been incredible through the journey. I mean, they were incredibly supportive, bringing top talent, helping us with key recruitments. So, and they are very long relationships. If you think about it, I've worked with Apex in their portfolio for almost 20 years. I did 3 companies with them, and today, I'm working with Index. So I've been working with Index for, more than 15 years. When you invest in an investor relationship, think long term.
One of the lessons to be learned here, I think, for listeners, is not all investors are bad guys. Some of them really, really can be your partner in achieving success, but you need to choose carefully.
Hopefully, it's more than some.
So you took King to market. What happened then?
The team took King to market. Ricardo, who founded the company in 2003 with co-founders, was leading the process. We had Hope Cochran, who was the CFO, who was a very experienced NASDAQ CFO. I think we courted her for 6 or 7 months before she agreed to meet, and we finally managed to convince her. And so I happened to be part of that team. And then we took the company public, which was, I think, a huge achievement and something that I highly recommend, even though many founders now tend to keep their companies private for much longer for reasons that are understandable as well. But if before, or actually after we made the decision, and at the time King was the largest content partner of Facebook, so we were generating a huge amount of revenue for them, both because we were on the Facebook Canvas platform, and it's like the App Store. We were paying 30% of more than $1 billion of revenue, and also because they were the main distribution channel at the time. So we went to see Mark Zuckerberg, and we sat down after their IPO to basically get his lessons learned. And he had a horrible IPO. I don't know if you recall that the Facebook stock dropped by 50%. And so what he said is, it made my company a much better company. And if you look at where they are today, I think he had a point at the time that it forced him to make a bunch of decisions and put in place an infrastructure that made the company much more robust and long lasting. And I think that's exactly what we did. And we took that lesson. So we build the infrastructure, we go public, the roadshow goes very well until so that's about 10 days until the weekend before the pricing, where essentially we hear through the underwriters that there is some negative sentiment which is developing out there. On the day before going out, the decision, there's a discussion and the decision is made, even though there might be a negative sentiment, to still go out. That's the responsibility of the underwriters, because that they essentially take that risk. When we go out, we can't match bid and offer. And again, if you recall, that's what happened to Facebook. And Facebook, they did not open for about 4 hours, and when it opened, it started dropping, and then it dropped over the following days by 50%. So the underwriters decide, fine, even if we can't match, let's not run the same risk. And after 20 minutes, we go out, and then the price starts dropping and kept dropping, quite low, and then recovered, and we ended the day at minus 17% on day one, which is the worst large IPO on the New York Stock Exchange in 20 years. My CFO and my investor relation team really disliked that statement. I think it's fine. It's actually, I think we should take some pride in the fact that we went out, and then and actually we recovered, and we had a great story. And Ricardo was basically being interviewed by all the big channels on TV, and he did a fantastic job, even though behind him you had the price basically going down. He did a fantastic job delivering the same message, because the content and the story is the same whether the price goes up or goes down. And that's been the case. Post IPO.
Well, we're really glad that you stuck. We're really glad you stuck with it.
What was really interesting is that we had a really good culture in the company, and it was not a mercenary culture. People were there because they loved the product and they loved working there, and working together. And they watched the price drop and the interviews for 20 minutes or 25 minutes. We had big offices with big screens, and everybody was watching, and then they walked back to their desk and they got back to work.
Maybe this reaction to what would break many people was because the management team had been together for quite a long time and had been through tough periods before.
Yeah, I think it was an extraordinary founding team. At the time of the IPO, all the founders, with the exception of one, were still in place, and three of them with leadership positions. There was Ricardo, the CEO, Sebastian, the chief creative officer, and Thomas, the chief technology officer, were still at the top table and delivering, at a very high level. And what attracted me to the company is the fact that they had such strong values of integrity and care, and that's what made the culture of the company. And hopefully, it's still there today. Right? It really, created something very special.
It's true to say that what doesn't kill you makes you stronger, and King went on to grow and grow and grow.
Well, it took a while. As I was explaining, Candy Crush peaked in July 13, and then we went through two other phases. One, which was to launch a number of other titles to sustain the growth, and then a second one where we realized that actually there was huge potential with reactivation and stimulation of the engagement of the players, and it's through those strategies that King went back to growth, and the year before it was acquired by Microsoft, it was almost at a $3 billion run rate. I think when we IPO'd, we were at a $2.2 billion run rate in bookings. So it managed to find its growth back probably around 2017. That it started to really pick up, and then it kept growing until 2023 and 24.
What again is really interesting about this, and you said acquired by Microsoft, but of course that was the ultimate acquisition. The company was acquired by another player in November 2015. Can you talk us through the thinking on this?
King was extremely successful and extremely profitable. When these consumer companies hit the lightning in a bottle, which was the case, the growth is explosive and they can become very profitable. So the year prior to IPO, we had almost $1 billion of EBITDA. So we had become a very, very profitable and rich company. But also it meant that there were very few potential acquirers who could afford to make a transaction of that scale. And we had investors who had invested in the company in 2005, had very patiently supported the company over 8 or 9 years, and at some point wanted to see some liquidity. And so going public, even though typically when you go public is because you want to raise financing to finance your growth, either organic growth or acquisition. We had $1 billion of cash on the balance sheet. We didn't need third-party financing, but that we thought that was the best way of generating a liquid market for the shares of the company, and therefore allowing the investors to realize liquidity. Unfortunately, that did not happen, because for most of the time during which we were listed, the price was below the IPO price.
It sounds like you did the right thing for them. They wanted out. Like you say, you have to have an exit. It's a mistake that a lot of Europeans make. They don't get to the exit.
Maybe we went a little early. We still had large revenue concentration on Candy, and the market was not fully ready. But I think it was a great outcome for investors, for the team, for the company. It found a great home in many ways, Activision Blizzard was the perfect home because it was a very complementary transaction. They had the world-leading IP on a console with Call of Duty. They were world-leading IP on a PC with Warcraft and the other Blizzard IP. And by combining those with King and the Candy Crush IP, they had leadership in PC, console, and mobile, which were the top three platforms. And also they were adding a new audience because we had mostly casual players and they had mostly core and mid-core players. So very complementary from that standpoint, and also from a skill set standpoint because King was a very data-driven company, which and we were doing things, in a different way, and so there were lots of potential synergies. Basically working with the Activision and the Blizzard studios and combining the skill set of all these leading franchises.
What was interesting was Activision Blizzard was essentially the combination of a French firm and an American firm. So King hadn't sort of left Europe; it combined with another piece of Europe in terms of cementing technological leadership there.
Yes.
And as I understand it, one of the things that Activision Blizzard did very well in the acquisition was essentially to leave King alone, to allow it to continue to do well what it did well.
Obviously, the leadership team had been, running King pretty autonomously as a private company, and even, after we went public, and they had, and so, for the first, I would say, 2 to 3 years of the acquisition, they were very smart. This was a very successful company. I think it was decently run. They could obviously, we needed to integrate basically into I would say the corporate architecture of Activision Blizzard, which we did. They sent somebody who had led the transaction and became our CFO and was an incredible partner to Ricardo, myself, and the rest of the team, Miss Omam Shaknini, who eventually became the president of King, and ran the company, and then they left us, largely running the business for the next 2 to 3 years.
And ultimately, and I think that this happened after you had moved on, the company was so well run that Microsoft decided to acquire it in one of the biggest acquisitions ever in tech history, so big that it took 18 months and an enormous amount of trawling through regulatory processes to do it.
I mean, that's the largest ever cash takeout. I think it's $75 billion.
I wonder if it would happen today. Maybe not with regulators, right?
Maybe not with AI. Remember that the transaction took place during COVID, and it's before, the chat GPT moment happened, and Microsoft pivoted, a lot of its resources and focus on AI.
This journey has to be one of the most involved journeys we've ever covered, Jono.
And I think there's some interesting learning points in it here. One is don't overestimate the difference between business to business and business to consumer, particularly if you're running companies quite clearly on numbers. IPOs can be a very Nietzschean experience. Very interesting to hear the tale there of Mark Zuckerberg saying that going public made Facebook a much stronger company. And I think that's just because of particularly the financial disciplines it puts upon you. And also, if you do go public, and frankly, this is true of any potential crisis situation, such as King experienced in the drop in share price, the need to communicate, clearly and consistently is extremely important.
90% of the problems in companies, private or public, are communication, either horizontal communication or vertical communication. To go back on one of your points about, the why Zuckerberg said it made the company better. Sure, there is something about the financial robustness, but a lot of it is about forcing you to think ahead and deploying. And there is, because the market will perform a much tougher due diligence on you than private rounds. Right? The capital market, institutional investors, they come from the future. They come from 25 years ahead of, and they have a very different mindset. They don't look at your unit economics, they look at the margin structure 10 or 20 years in the future. And they look at the sustainability of your company. And so they're going to take a very close look at the leadership and what are the incentive structure, the way the company is structured, how they're thinking about strategy, what are the potential future growth engines, and how that company will keep generating value and compounding value over the very long term, which is often something you don't do as a private company. And so that forces you to, do that thinking and put in place, an organization and bring in people and put in some process, hopefully not too much, that will make the company more robust and long lasting, not only financially.
So for those of people who have sold companies to, say, private acquisitors, a lot of that is also true. The need to look forward, which so often when you're running your own business, you're just looking virtually to the next day, never mind the next quarter. But in the public gaze, it just gets turbocharged, and you really, really have to be on your A game in that situation.
Are you still developing separate marketing plans for each of your different channels to market? Can you really sanction messages reaching the same customers from unconnected targets? Listen, it's now the AI age. Things need to change. Positive is a different sort of AI-powered agency. From our very beginning, we've integrated marketing communications from PR to events, social to paid ads. Working smarter means working integrated. Let us show you what a truly joined-up strategy could do for your tech business. Contact Positive today with an email to hello@positivemarketing.com.
So after the exit to Activision Blizzard, Stephane decided it was time to move on. But, as a good entrepreneur, he didn't let the grass grow under his feet. He became an advisor to Alan, the first digital health insurance company in France. And in April 2020, joined a company you may have heard of earlier in this podcast called Index Ventures as a venture partner, and has subsequently had board positions at Birdie, Kodat, Fanoa, Omio, as well as a series of other board and advisor positions. But as we said, you can't keep a good entrepreneur down. And in April 23, he founded QDE Studio. After that experience with King, you might not be surprised to find out that the Q in QDE stands for Queen. So let's see if we can find out a little bit about Stephane's new company. And you might want to pay attention to this, as if you look for QDD, you will find what we can only describe as a bit of a stealth mode website. So, Stephane, can you explain what you're up to and the opportunity you've spotted?
One of the things I did after joining Index is also to be part of a team that led the investment into Dream Games, which is the maker of Royal Match, which is the title that's overtaken Candy Crush in the leaderboards a year and a half ago. And I think that proved that there is still a lot of life left in mobile gaming, which had become, a bit of a less attractive sector after all the changes that Apple brought to the IDFA. And there was a big question mark from venture investors and from the community in terms of, okay, have we seen the end of mobile gaming? Because the leaderboards are the same, it's always the same top titles, and we haven't seen anything new in a long time. They proved that you can still get to the top. They did get to the top, over to Candy Crush, and then 3 weeks later, Monopoly Go came and became then the top title. But that only highlighted the potential there was there. And so when I was at King, I worked very closely with Sebastian Knudsen, who was the chief creative officer, who's the father of Candy Crush, but also the father of many other IPs, which were the category leaders in their own subcategory. He designed Pet Rescue, which was the largest clicker. He designed Bubble Witch, which was the largest bubble shooter. And he designed Candy, but also Candy Crush Soda, which was the sequel, which was a massive title, or Fan Heroes, which was another $1 billion title. And so we had that period at King between 2011 and 2013, which was exceptionally creative, where we came up with category leaders in four different in the largest casual subcategories. And so when he decided to step down from Activision Blizzard, or to step down from King, he stayed 3 years. There were these 3 year cycles, and when I decided to step down, he was working on a new title. He wanted to finish it, and so after 3 years, he decided to step down, and we got together, and we thought, that we still have an appetite to build another one. There's still a massive opportunity, and that we want to go back to a type of organization where we can bring back that creativity we had they were not the early years of King, they were the early years of the Facebook and the mobile era. And so we set up Queen. It's a mobile gaming company, a mobile gaming studio. We make what we know, which are mobile casual games. And a bit like King and Candy Crush, the brand will be the product. So we're working on several titles, which we hope will make their mark. And then I think when the titles are ready to bring magic and entertainment to millions of players.
Our next slot on today's pod is what we call the 5-Minute Mentor. And this is where we ask distinguished founders what would be their advice to other founders or indeed people who are scaling businesses. So if you look at Stephane's CV, you'll know that very few people have the level of rounded experience in the world of tech that Stephane has. So given your extensive experience of building and funding tech companies, what are the key lessons that you have learned in your journey to where you are now?
There are some general lessons in business, in how you scale and you run companies. And I think the first one is that the majority of problems in companies come from communication and poor communication. And so, and you want to over communicate. And when I talk about communication, it's both vertical communication, so from leadership down, and horizontal communication, so across the various business functions and corporate functions. And you want to be truly systematic there. I'm not the first one or the only one to have raised that. There is a very good blog, I think, by Ben Horowitz, who's talking about that, the architecture of communication, and how you can think about what you need to communicate and to whom on a daily, weekly, monthly, quarterly basis. And so we had we built a matrix, and typically that's something I've shared with several of the companies I've worked with. If it's not in place, saying, okay, you need to know basically who you will communicate to, what will be the content, who's in charge, what's the frequency, who's in the room at the time, or obviously if it's a staff meeting, is it going to be a video, is it going to be a call, what is it going to be? And you combine that with the second, I think, challenge, which is decision making. Who makes decisions, and how do you make decisions in the organization, and then how do you execute them, which also is at the source of things not going well. If, for example, you have a lack of alignment between the top of the organization and the rest, and of frustration, where very often, and that's an issue we had at King, and it's an issue that's present in many companies, where there is always a layer in the organization that feels they should be making decisions or more involved in decision making, and where you have lower engagement. When you run the engagement surveys in organization, what was very striking to us was that where we had the biggest issue was not, basically the new joiners, or the rank and file and the like. It was actually pretty senior management, not the top leadership team, so not the top 10, but the next 40.
And presumably, Stephane, they're the people that, in truth, want to be part of that top 10. And that's one of the issues.
Yeah. And so we made a big investment in reaching out to them, bringing them in, bringing them to the top table as soon as we could, pushing down decision making to them, and also putting in place a compensation system where they felt they were very aligned with the senior team. And I would say it worked for half of them. So I think all of them will say, I want to make more decisions. But actually, when faced with the ability of making the decisions, probably only half actually, step in and take that into their own hands and do so. And the other one actually are probably more comfortable getting broad direction from the rest. But a big part, we were talking about leadership journeys. You see, when it begins, most of the skills you use are hard skills. So it's very quantitative, very number driven. And at the end, it's almost all soft skills. So once basically the core business is in place and it starts to run, it's all about developing the next generation of leadership. It's all about recruitment. It's all about motivation. And in the last 2 or 3 years, a huge chunk of time was spent with that top 50, basically to try to prepare them to take over, get up to the top 10, and then over time, lead the company.
What can you say about top teams, the top team, that top 10? What is it that you have to have between you that gives you the magic to achieve the sort of things you did at King?
You look at mobile gaming, or you look at very successful consumer businesses, and you're going to need a number of areas or skills that all perform very strongly. In the case of mobile gaming, we had what we called creative, which is one level of Candy Crush, that's gameplay. You had the craft, which is the business model. It's the envelope. It's the social. It's the leaderboard. It's the monetization. All of that stuff. You have the science, which is to make the game not too difficult so that you don't lose your players, but not too easy so that they feel challenged, right? And that's where we had, as I mentioned, we had 150 quants, mathematicians, and like you have then the tech, because at peak we had 540 million players. We had 1.5 billion gameplays per day, so that's 50 billion data events. And so you need a very strong tech team to build at that scale and to run an environment at that scale. Then you need marketing, because if you want to get these 540 million players, you're going to have to go and get them and then keep them. And the key is to get all of these functions to play nicely with each other and to work towards the same goal. And the way you do that is through an incentive system where they're fully aligned. And so at King, the target was the same for everybody. It was to maximize the revenue of all the games, of all the studios. And everybody was incentivized on that one number so that we could make sure, they would all cooperate, but also that the studios would cooperate. Because there's there were many, features that were pretty similar between the titles, and we wanted the teams to share. If they find something that was very insightful, we wanted them to share with the other studio and share with the other titles. And actually, we had a team that was doing just that, a harvesting team. They would identify what was working best, in one, and actually also come up with, it was called the experimentation team, with ideas where they might almost break the game. But it's much better to break a $1 million game than a $1 billion game. We would break the $1 million game, and sometimes they came up with incredible ideas where we had one where basically it increased, I think, revenue by 8%. Well, 8% of $2 billion is $160 million. Then they brought that to Candy, and then we increased the revenue very, very materially. And so going back to how do you keep that leadership team, you basically have a very clear set of objectives, have an incentive system where they all rewarded on this, basically based on the same target, where it's truly a partnership, and also be very honest and transparent in terms of what's expected of them and the performance, because it's a peer group, and I think all of us had to work pretty hard to keep performing at the level that was required. And on the transparency, you have to tell the truth, even if the truth is difficult. The team will always be able. They will always be able to take. They will be able to take it. They will be grateful, and then you have to tell them what we're going to do about it, and what the path forward looks like. But we were always transparent with the good and the bad. When there were issues, we would put them forward and share them with the entire company.
Thank you for listening. If you want to learn more about category design, head to becategorical.com. If you need help designing and dominating your category, then get in touch. Contact details are in the show notes.